Okay, let's get started with booking invoices for the month of March. So what do we have? We have an invoice from Food Traders paid by credit card. So we're familiar with that. Let's go ahead and do that. Make sure we enter the date that we paid it, not necessarily the invoice date, because sometimes we pay not in the same month. We're very much familiar with this by now, but still, let's keep working on it. So that's our supplies, food purchases, supplies. Very good. Again, our liabilities are going up, and therefore they're credited. And our expense account goes up as well, and therefore it's debited. So very important to understand the debits and credits behind this entry. So we're depicting it right here. These are our debits. These are our credits right here. This amount belongs to this account. This amount belongs to this account. Good to go. Save and close. Next one is also paid by credit card. Okay. Very much similar to the previous one. The only difference will be our expense account will be different. In this case, restaurant supplies. The transactions will be very similar. Our liability goes up because we paid it with a credit card. We paid this charge with our credit card. Therefore, we borrowed to pay it, and therefore our liability went up. And our expenses went up because we incurred some expenses. Again, debits and credits are in balance. Here we are. Next invoice was paid with a check. So again, we're going to go and write checks. Again, please make sure this button is unclicked. If you do click it, you will not be able to input the check number because you'll have to print it and then it will automatically assign. So make sure it's unclicked. Check number 1008. And that's our cleaning supplies. Again, we're very much familiar, but let's make sure that we fully understand that what's going on here, right? Our bank account is going down and our expense account is going up. So again, debits and credits. This is our debit. This is our credit. This one reduces our bank account. This one increases our expense account. Okay, this one was paid with a credit card. Okay, we're going to continue using our invoice number as our reference number. All right, debits and credits are in balance. Good to go on this one. This one was also paid with a check, so we're going to write a check. Oops. Okay, so again, make sure you understand debits and credits. What are we doing? We're debiting our expense account. Expense accounts go up when they're debited, and we're crediting our bank account. An asset account and bank account is an asset, right? They are reduced when they're credited. So this is our debit, this is our credit. This one was also paid with a check. Again, when you're entering, don't enter the invoice number, right? Because we're posting it after the fact. Enter the date you paid it. It will probably be the closest to the clearance date, right? The one that will show up on your bank statement. So that's what we're going for. Okay, so in this case, again, we have one of those invoices that hits more than just one expense account. So let's make sure we'll get through this. So let's see, that's our rent right here. And then we have insurance. We have dues and subscriptions, repairs and maintenance, and then advertising and promotion. Alright, so these are our expense accounts that are being debited, and this is our checking account, bank account that is being credited. So let's go ahead and depict it all right here. Again, our debits and credits, our sum of debits and credits is in balance. That's what we're going for. We're crediting our bank account and we're debiting all these expense accounts. They're going up. The bank account balance is going down through credit. What's important is that the sum of debits equals to the sum of credits, and they do. And we can go ahead and save and close it. And that concludes booking of the invoices for the month of March. Now we're going to go ahead and book our credit card transactions using receipts that we got. And the first one is our gas station receipts. Alright, again, let's make sure we understand what's going on behind the interface. We're paying for an expense using credit cards, so our liability account goes up. And our expense account goes up, right? Because we purchased some fuel, that's an expense. Here we are. Debits and credits are in balance. 7. Again, we got another gasoline receipt. Similar to the other one, but let's make sure we reinforce our knowledge and understanding. Here we are. Debits and credits are in balance. Again, these are our debits. This is our credits. It belongs to this account. Go ahead and save a new. Let's go ahead and book this next transaction. Next transaction is a purchase from our online market. It's an online retailer. And it's a good one because this one has couple of new elements that we haven't covered before, and we can cover it here. And they include purchase of an asset and essentially personal expense, personal purchase that is not business related. How do we book that? I get those questions sometimes. Both are very easy. So again, first we're going to book equipment. Right here we have our equipment. What's important is to make sure we include everything that we have to include, and in this case we're going to include the equipment itself. We're going to include installation kit because that's what required to bring equipment to operation. We have some wiring kits we got to include, and we're going to include a portion of the tax, and I happen already calculated, so I know which portion belongs to the equipment. So here we are, that's our Pro Cooler, and then the remainder goes towards our draw. Again, the video game is not part of the it's not part of the business operations, at least not for this business, and therefore we have to make sure we book it as a draw because again it's not an expense. So let's take a look what's going on behind the scene, right? So we have our credit card account, and the liability is going up because we bought the Pro Cooler, everything that we need to install it, and we purchased a personal item. We did all that essentially by borrowing. So we financed that purchase using the money that we borrowed, so our liability goes up, it's credited, right? What else happened? Well, we just bought some equipment, right? So we're going to capitalize that. And like I showed you, to book equipment, you got to include all those kits and wires and installations that are included. If you have shipping, you would include shipping potentially as well. And you have to include the portion of the sales tax in it. And then when you do make personal purchases using business credit card or business bank account, that's essentially a draw. It's the same as if you took that money out of the bank. Like we book those draws when we reconcile our bank statements, and that would be identical. So again, what's going on here? We credit our credit card account, liability goes up. We debit our asset account right here. Assets go up when we debit them. And we debit our draw account, that's an equity account. And an equity account goes down when we debit it, right? So that essentially reduces our ownership in the business by $48.94. Debits and credits are in balance. We're good to go. We're going to click Save and New. All right. The next one is a return receipt, right? So we're returning the video game, right? We purchased it. We realized we have a business to operate. We don't have time to play video games, and we're returning it. Again, right here in the same interface that we were before, we're going to click on Refund and Credit. It will reverse the behavior of the squares, these windows, and we essentially will cover it in a second here. So we're going to return it to Online Market. Here we are. And since we are essentially returning a personal item, which in turn will reduce the liability for the business, we're reducing the draw as well. So we're going to, the rule of the thumb is when you're doing a refund, when you're doing a return, you book it as an opposite of the transaction that preceded that return, that in a way originated that return. So again, let's go ahead and enter it. All right, here we are. So let's make sure we understand what we're booking. So our liability account is now reduced, right? So because we returned an item, the credit card company got that money back from the vendor, from the merchant, whoever sold it to us. So our debt got reduced by that, right? What else happened? Well, since our debt got reduced, so in a way, we returned a personal item that we purchased, and that item was used to reduce the debt, our equity went up, right? We reduced our draw, but in a way, again, the 3700 MEP draw account, it's an account that's an equity account, and in this case, when we credit it, it goes up. So what happened? Our liability went down, and our equity went up. It wouldn't be much different if we paid a credit card bill using our personal money, right? So let's say we had a bill, we would take our personal money, not the business money, settle the bill with the credit card company. That would reduce our liability. What's the offsetting entry? Our equity would increase. So again, kind of similar here, but let's not get into that right now. Let's just stay with this interface and make sure we fully understand what's going on here. This is the credit for our equity, and this is the debit right here for our liability. So let's go ahead and book this one. And we have one more that we need to book, and that's our transaction receipt for the payment, right? So essentially, we're making a payment from our bank account. It's very similar to what we just booked, so we're going to stay in the same, right? Refund credit. Okay. So what's going on here? We're paying it using our bank account, right? So our bank account right here, it is going down, and our liability account right here is going down. So let's make sure we reflect it. Okay, so again, to reiterate, what happens here? Credit to our bank account is an asset that's reduced. Debit to our liability account, to our credit card account. Liability, credit card account is a liability. When we debit it, it's reduced. So what happens? Our debt, our liability are going down, but at the same time, because we're settling it with our cash, our bank account is the balance is going down. So we can go ahead and save and close, and go ahead and clear this for the next entry. And that concludes posting receipts and invoices